The concept behind Gurufocus is to provide investment ideas based on what famous investing gurus are doing. Gurus such as Warren Buffett, John Paulson, Joel Greenblatt, George Soros, etc. The title of the site suggests that Gurufocus is concerned with value investing, but you can find different types of investors on here, and there are plenty of ways to use the site even if you're not a value investor. Again, some information is locked away to paying members, but there is enough free stuff that we can use. So straight away we can navigate to Gurus on the main menu and take a look at the list of all the gurus available on the site. Immediately we can see Icahn, Charlie Munger, Joel Greenblatt, etc. If we click on Gurus and then click List of Gurus Personalize, we can filter the list down based on investment vehicle, country, numbers of stocks, total value, return and turnover. So if we bring down the numbers of stocks, for example, we can see how gurus like Bill Ackman are carrying less than 10 stocks at the moment. And if we click into his profile, we're able to see Ackman's latest stock picks and portfolio. However, this data doesn't cover the last 3 months. For that, you need the paid version. So let's go back a step and change the filter based upon return. If we change 10-year returns to 12%, we get a list of traders who have managed to return 12% or more over the last 10 years. And so we can see that the list is actually pretty small, and only 6 gurus have been able to do that, which really shows how difficult investing can be. Of course, it's possible that the best performing gurus over the last 10 years may be the worst performing over the next 10 years. So it might actually be better to look at the gurus who have performed the worst. And you can do that by dragging the filter down to the lower amounts. But checking out different guru picks is not the only thing you can do on Gurufocus. There's also a strong stock screener, some useful information about insider transactions, there's articles and there's a forum. Let's take a look at the screener, which you can access by clicking on screener and then all-in-one. Using the all-in-one gives us the most number of variables which we can use to screen for stocks. So if we start moving these around, we can narrow our focus and find some trading opportunities. I normally screen for cheap value stocks based on criteria relating to earnings, so I can plug in a few things here and see what happens. And in my other course, How to Beat Wall Street, I talk about an 11-rule Graham value system that uses stock screens to pick stocks and has produced strong returns over the last 15 years. So right now I can just plug in a few numbers such as revenue, current ratio, return on equity, etc. So I've plugged in those numbers, but however, as you'll see, we've updated the screener, but all the stocks below it are blurred out because this isn't the premium version. But there's a simple solution, and that is to load up the Google screener and find those stocks on there. For example, we've only got a handful of stocks here, and the first one is trading at a price of $114.70. So let's just put that into the Google screener and see what stock it is. So on Google, we just add criteria and add the last price. Input the price level and market cap, and we'll be able to match up which stock it is. So we can see that this one is actually Snap-on Inc. SNA. And if we want to make double sure, we can then look it up again on Gurufocus by bringing up the ticker. So we can see that the price matches up, and so do the other values, so we can be sure that we've got the right stock here. The other thing we can do on Gurufocus is to take a good look at insider transactions. So if we bring up a stock like Snap-on using the search function, we can straight away see a load of useful information about the company. Then if we go into Insider, we can take a look at the recent insider transactions. So this one shows that there's been more selling than buying over the recent months by insiders. And if we look further down, we can see more details. And we can see that one of the vice presidents of SNA actually sold 856 shares on the 18th of August. That may affect your trading decision, and it might not. If the selling is only a small percentage of the director's overall holdings, like in this case, it's probably nothing to worry about, and it's normally just a regular event. Another thing I want to show you on Gurufocus is the DCF valuation calculator. So DCF stands for discounted cash flow and is considered the theoretically correct way to value a company. Now there are plenty of ways to go about this, but the calculator on Gurufocus provides a quick and easy way to calculate DCF and find out whether the stock you're interested in has any margin of safety. A margin of safety basically means the difference between the intrinsic value of a stock and its market price. So the larger the margin of safety, the safer the investment. So straight away you can see that the DCF calculator on Gurufocus is giving Snap-on Inc. a 25% margin of safety. And that's based on a terminal growth rate of 4% and a discount rate of 12%. You can change all of these inputs in order to come up with different estimates. For example, you might prefer a discount rate of 11%, and you might want to alter the growth rate. Since growth is subjective, you may want to put in your own estimates of earnings growth for the company. In this instance, you might think that 17.3% is a little bit higher, so you might want to be conservative and tone that down to maybe a smaller number. Naturally, that changes the calculation and gives the company a different margin of safety. And by the way, a larger margin of safety will indicate a much safer buy. The last thing I want to show you on Gurufocus is the interactive chart. And this is useful for plotting different numbers and ratios against each other. And one thing you can do on the interactive chart is to have a look at the Peter Lynch earnings line. Now, Peter Lynch is a well-known investor who wrote the book One Up on Wall Street. And in the book, he talked about this earnings line that helped him to produce 29% return over 13 years. So to construct the Peter Lynch earnings line, you basically draw the stock price and the earnings per share together and align the value of $1 in earnings per share to $15 in stock price. If a stock is overpriced, it will be above the earnings line, and if it's cheap, the stock price will be below the earnings line. So to set up the Peter Lynch earnings line, we simply select price, which is already selected, and then price at PE equals 15, and that will give us the PE at the fair value level. We then click on log to make the chart logarithmic in scale. So now we can see that for SNA, the price level is significantly higher than the PE at fair value 15. So this indicates that the stock is overpriced at the moment and it's not worth buying. But as you'll see, when the price has dropped below the PE at 15 earnings line, it's generally been a very good place to buy.